As we delve into the intricacies of the global financial landscape, it becomes increasingly evident that the recent surge in triggers for Korea's sidecar system to a record high is not an isolated event, but rather a symptom of a broader trend that warrants scrutiny. The sidecar system, designed to provide a safety net for investors, is facing its most significant test yet, and the outcome will have far-reaching implications for the market. To fully comprehend the magnitude of this development, it is essential to examine the historical context and the underlying factors that have contributed to this unprecedented level of activity. The concept of a sidecar system is not new, and its implementation in various forms has been observed in different markets around the world. However, the Korean version has been particularly noteworthy due to its innovative design and the significant role it plays in the country's financial ecosystem. By providing a mechanism for investors to hedge against potential losses, the sidecar system has helped to increase market participation and deepen the liquidity of the Korean financial markets. Nevertheless, as with any complex system, there are inherent risks and unintended consequences that can arise, particularly when the system is subjected to extreme stress. The record-high triggers in the sidecar system can be attributed to a combination of factors, including the heightened volatility in the global markets, the increasing correlation between different asset classes, and the growing participation of retail investors. As the global economy continues to navigate the challenges posed by the COVID-19 pandemic, trade tensions, and monetary policy shifts, the financial markets have become increasingly sensitive to any signs of instability. The resultant volatility has led to a surge in hedging activity, as investors seek to protect their portfolios from potential losses. This, in turn, has triggered a self-reinforcing cycle of deleveraging and volatility, exacerbating market stress and pushing the sidecar system to its limits. From a technical perspective, the activation of the sidecar system at these elevated trigger levels may also precipitate a gamma squeeze in affected stocks. As hedging activity by dealers and market makers amplifies price movements, the likelihood of extreme tail events increases, potentially leading to a sharp and sudden correction in the market. This phenomenon is not unique to the Korean market and has been observed in other contexts, where the interaction between hedging activity and market volatility has created a perfect storm of instability. The proposed acquisition of Underdog by IG Group HLDGS plc is another significant development that warrants attention. While the details of the acquisition are still emerging, it is clear that this move is part of a broader strategy to expand the company's presence in the market and diversify its offerings. The acquisition of Underdog, a company with a strong track record in innovation and customer engagement, is expected to bring significant benefits to IG Group, including enhanced capabilities and increased competitiveness. However, the implications of this acquisition extend beyond the company itself and have the potential to impact the broader market. The oil price forecast, which suggests a high degree of uncertainty and volatility in the coming days and weeks, is another factor that needs to be considered. The price of oil, a critical component of the global economy, has a significant impact on inflation, growth, and financial markets. As the global economy continues to recover from the COVID-19 pandemic, the oil price will play a crucial role in shaping the trajectory of the recovery. The current forecast, which suggests a high degree of uncertainty, underscores the need for caution and highlights the potential risks and opportunities that arise from this volatility. The Crypto Insights report, which highlights the pressure on the Senate to pass the Clarity Act, is another significant development that warrants attention. The Clarity Act, which aims to provide clarity and regulatory certainty for the cryptocurrency market, has the potential to be a game-changer for the industry. By providing a clear and comprehensive framework for the regulation of cryptocurrencies, the Act could help to alleviate some of the uncertainty and risk that has held back the development of the market. However, the passage of the Act is not without its challenges, and the Senate faces significant pressure from various stakeholders, including industry players, regulators, and lawmakers. The economics behind the Aave proposal to ditch 6 chains that earn loose change in revenue is another fascinating development that highlights the complexities and nuances of the cryptocurrency market. The proposal, which aims to optimize the Aave protocol and improve its overall efficiency, has sparked a lively debate within the community. While some argue that the proposal is necessary to ensure the long-term sustainability of the protocol, Others contend that it could have unintended consequences, such as reducing the overall liquidity and diversity of the market. This debate highlights the challenges of governing a decentralized network and the need for careful consideration and analysis in decision-making. As we reflect on these developments, it becomes clear that the global financial landscape is undergoing a significant transformation. The intersection of technological innovation, regulatory change, and market volatility is creating a complex and dynamic environment that requires careful navigation. The recent surge in triggers for Korea's sidecar system, the proposed acquisition of Underdog, the oil price forecast, the crypto insights report, and the AVE proposal are all part of a larger narrative that highlights the interconnectedness and interdependence of the global financial system. In this context, it is essential to adopt a contrarian perspective, one that challenges the conventional wisdom and seeks to identify opportunities in the midst of uncertainty. By taking a step back and examining the broader trends and patterns, it is possible to identify potential areas of value and growth that may not be immediately apparent. The key to success in this environment is to remain adaptable, agile, and open to new ideas and perspectives, and to embrace the complexity and uncertainty of the global financial landscape. As the global financial landscape continues to evolve, it is clear that the next few months and years will be shaped by a complex interplay of factors, including technological innovation, regulatory change, and market volatility. By navigating this complex environment with care and caution, we can create a more resilient and sustainable financial system for the future, one that is capable of supporting economic growth, stability, and prosperity for all. The historical context of the sidecar system in Korea is also worth examining. The system was first introduced in the early 2000s as part of a broader effort to develop the country's financial markets and increase investor participation. Over the years, the system has undergone several modifications and enhancements aimed at improving its effectiveness and reducing the risk of unintended consequences. Despite these efforts, the system has faced several challenges, including criticisms of its complexity and the potential for abuse. Nevertheless, the sidecar system has played a significant role in the development of the Korean financial markets, and its impact will continue to be felt in the years to come. The global economic outlook is also a critical factor to consider. The COVID-19 pandemic has had a profound impact on the global economy, leading to widespread lockdowns, supply chain disruptions, and a significant decline in economic activity. While the global economy has begun to recover, the pace of the recovery remains uncertain, and the risks of a relapse are still present. In this context, the role of monetary policy has become increasingly important, as central banks seek to support the recovery and mitigate the risks of inflation and financial instability. The recent surge in triggers for the sidecar system, the proposed acquisition of Underdog, and the oil price forecast are all part of a larger narrative that highlights the challenges and opportunities of the current economic environment. As we look to the future, it is clear that the global financial landscape will continue to evolve and change. The intersection of technological innovation, regulatory change, and market volatility will create new challenges and opportunities, and the ability to navigate this complex environment will be critical to success. The recent developments in Korea's sidecar system, the proposed acquisition of Underdog, the oil price forecast, the crypto insights report, and the AVE proposal are all part of a larger narrative that highlights the need for careful consideration, analysis, and decision-making. By embracing this complexity and uncertainty, we can create a more resilient and sustainable financial system for the future, one that is capable of supporting economic growth, stability, and prosperity for all. In conclusion, the recent surge in triggers for Korea's sidecar system, the proposed acquisition of Underdog, the oil price forecast, the crypto insights report, and the AVE proposal are all part of a larger narrative that highlights the complexities and nuances of the global financial system. By adopting a contrarian perspective, one that challenges the conventional wisdom and seeks to identify opportunities in the midst of uncertainty, we can uncover new areas of value and growth that may not be immediately apparent. The key to success in this environment is to remain adaptable, agile, and open to new ideas and perspectives, and to embrace the complexity and uncertainty of the global financial landscape. As we look to the future, it is clear that the next few months and years will be shaped by a complex interplay of factors, including technological innovation, regulatory change, and market volatility. By navigating this complex environment with care and caution, we can create a more resilient and sustainable financial system for the future, one that is capable of supporting economic growth, stability, and prosperity for all.